What's up, guys? Welcome to the weekly alpha. In this video, I'm going to break down 15 pairs and give you guys the best pairs to trade, exactly where to trade from, and overall just do an analysis so that you're prepared for the events heading into this week. Now, as you can see, based on, at the time that I'm recording this, it's really windy behind me. In fact, it's really windy all around me. So I'm going to try my best to keep the mic close to, ensure the best audio. But sometimes if I have to put my hand down, then the audio might suffer a little bit, but I hope you can bear with me. Now, just to, based on the, recent events that happened with Popcat and how I haven't been having the best month, I figured what is the best way to, show credibility than to actually keep track of all of my trades and all of my analyses, and win or lose, good or bad, like I'm just sharing the numbers with you guys for real, because ultimately I think transparency is going to, just build trust. Like, why should you listen to me, a random guy on the internet, give you analysis on 15 pairs? Well, this month so far, I have a 9 out of 12 win rate in terms of the analyses that I've done on many pairs. And out of the trades that I've taken, I have admittedly a 30% win rate this month so far, after 3 weeks of trading. And yeah, this hasn't been the best month. And, even though that is the case, I'm still up about 5R on the month. So again, not the best stretch of times when it comes to trading, especially because I took a couple of just random trades outside of the system. If you say like strictly following the system, I'm probably at a 3 out of 8 win rate, which is much better in terms of the numbers. But overall, like, there are some, like, we make mistakes, and what's important is to reflect on them. As you can see, there's reflections here. And yeah, just being really honest with the numbers for you guys. I'm going to do this for the YouTube channel as well. Hopefully at the, at every weekly alpha video, I'm going to just do a recap of like, hey, how many last week did I get right? And over time, I think we're going to build a really good running track record, because it's one thing for me to tell you, like, what I, it's one thing for me to tell you, oh, look at me, I've done this, I've done that. It's another one to actually keep track of the numbers and to, show you the numbers as it is, because there's no running or hiding from that. Anyways, let's get into the 15 pairs. In fact, before I do get into it, I'm going to pull up Forex Factory real quick, because we're going to need to talk about some news, and it's really important to look at news, because you want to ideally be trading on the news days and not the days without news, because then it's just really low probability. So I'm just going to apply a filter for all of the most important pieces of news here. And right off the get-go, you can see that it's good. Like, you're going to have a good day trading the USD on Tuesday, because you have red news here. Now, the other days to trade USD denominated pairs is going to be Thursday at 8:30 a.m. because that's when you have red news. And other than that, Fridays is going to be a good trading day. So Tuesday, Thursday, Friday, expect the highest volatility to come around those times. This applies to Bitcoin as well, by the way. It's not just US, or like, it's not just Forex or just USD denominated pairs. Now, for the Euro, well, in fact, let's just filter fully by red news. And yeah, for the Euro, your ideal trading day is going to be on Friday. So, as well as today, actually, German federal elections, but primarily on Friday. So yeah, the main things are going to be USD. Another one's going to be the Aussie dollar, CPI. Now, based on what I understand from the Aussie market, if there are any Aussies here, feel free to correct me if I'm wrong. But, you guys have a really, first of all, you guys are dealing with really bad inflation. I remember going to Australia for, I think, the second or third time in 2023. And like, I fell in love with Australia then. So I ended up deciding to return there for 3 months last year. And I kid you not when I say that the prices from 2023 to 2024 literally is like 20 to 30% difference. What would otherwise be a $3 latte is now a $4 latte. And applies to housing as well, and I think applies to a lot of the food costs and just general living expenses. So based on what I can understand, like, the CPI is pretty high. Like, the official numbers are not gonna, show you that it's bad, but the situation on the ground is pretty bad. So yeah, anyways, the forecast is 2.6. We're gonna look more at the Aussie dollar later. But yeah, just keeping an eye on the news. These are going to be your best trading days on whatever the pairs that you're looking at. So focus on those days for those pairs, right? And especially in terms of USD, that's going to really affect crypto, or like just Bitcoin movement. Bitcoin has been so dead recently that it will really help to have some kind of news catalyst to, drive some kind, like to just to inject some volatility back into the markets because let's be real, it's been dead. Anyways, we're going to start off with Bitcoin because we're still primarily a crypto channel. So at the moment, based on what you can see here, we are currently in a range-bound environment on a weekly chart where price is taken out this high and price is taken out this low. Overall, you're filled in the weekly fair value gap, and the overall trend is up, but there is no clear signs that we're breaking consolidation. In fact, in just the last 2-3 weeks, prices just hovered between 100k and 94,000, which is not a really big weekly range, especially from what we know about how volatile crypto markets can be. Now, what's important to note is that currently you have a couple of weekly relatively equal lows over here. Now, even though the weekly bullish fair value gap has been filled, this move here did not lead to a confirmed candle closure above this down close candle here, which means that we do not yet have a change in state of delivery, which means that at least on the weekly chart, while the overall trend is up, the recent order flow suggests that we're still in for more consolidation before we break out of this consolidation. And so what I can expect to happen is that we sweep the weekly relatively equal lows here. And yes, the fair value gap has been filled once, but then now you have formed a weak low here. Now, what is a weak low? A weak low happens when you fill... No, actually, this wouldn't be a weak low. Actually, there's a previous swing high here. So this would actually be a strong low. But still, the fact that you have relatively equal highs here means that potentially you're going to sweep previous weekly low and, perhaps the other previous weekly low. And yeah, at the moment, I do think the bias is probably something like this. Now, you will notice that I've wrote something here that says maybe AMDX is possible. Now, what do I mean by that? So if you take a look at the last month, you have essentially this is manipulation, this is distribution, and then this is probably also like a second phase of distribution. Now, what we got last week, like during the second week of February, is that we got an accumulation candle here. Last week, we had manipulation. Why is this manipulation? Because you swept the high and you swept the low, but you failed to put in any sort of real trend. So I think this week is going to be really telling in terms of where is the distribution. For example, if distribution is towards the downside this week, then next week, you're going to get X, right? Reversal. So perhaps this week is going to finish this entire just liquidity buildup, and then heading into Q2, we might potentially get more volatility in. But yeah, for this week, probably down and then up. But if I had to guess, Bitcoin's not the best pair to trade, and you're going to have much better opportunities. Now, Ethereum, on the other hand, is a different story. You are also in a range-bound environment on the weekly chart, but this likely goes, an open high, low, close higher. But at the very moment, there is no order flow confirmation yet until the weekly fair value gap is closed above. What I mean by that, if you take a look here, throughout this entire down move, essentially you've just been putting in bearish order flow. And until you break above this weekly fair value gap, basically trading above this fair value gap, closing like above it, right, finding it as support, then you know that order flow has changed at least on the higher time frame, and you can start going bullish, 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 bullish on Ethereum. Until that happens, any longs taken here is going to be, you should take it with more of a cautious side. Now, as for this week, I do think that we get a power 3 higher. Why? Because last week we got a bullish candle closure and we have an obvious draw on liquidity in the sense of this weekly fair value gap. So most likely you're going to open up the week. So this is the weekly open, right? Currently you're going to open up the week low, right? Open, high, low, close, higher, right? Power of 3 higher, which means that anything below the weekly open is going to be a good buying opportunity. And so you're going to open, go lower, but then ultimately, so open, go lower, ultimately expand higher, and then potentially close like this. I do think this is how the weekly profile is going to set up. And if we go onto the daily chart, the level that we want to see hold is this series of blocks right there. That is going to be the level that you want to hold for bullish confirmation or like just bullishness to potentially continue. Why? Because these are like just really strong bullish order blocks. Now, there is also, of course, the risk that you could just wick below it before going up here. But I think the bias for this week is going to be up, but very cautiously. Okay? Very cautiously. Overall, you're still within a downtrend. And like, just because we can anticipate price moving into the weekly fair value gap doesn't mean that we want to be trading a long into the weekly fair value gap. It's more of like waiting for price to get into the weekly fair value gap and then clicking a continuation trade. down lower, because ultimately this is still within a downtrend, at least on this recent swing. Yes, you have taken out all of the sell side liquidity at the range lows, but again, we want to see a change in order flow before we start considering longs in this case. Taking a look at total 2, or like, I mean, not total 2, this is just total. I do think that, we do get a power 3 expansion towards the upside, but this is not the best market conditions because, again, we're still just really chopping around. Now, overall, on the weekly, we are within an uptrend, and this is a strong low because you have swept all of these sell side liquidities here, and you have filled in the weekly fair gap. So we can reasonably expect this level to hold and not get retested. But even if you were to retrace to the 0.5 of this wick, it would still be a pretty strong move. So potentially you will, currently weekly is opening up here. You're probably going to sweep the previous weekly low and then go for the drawn liquidity on the previous weekly high. I do think that this is how the profile is going to play out. So power of 3 higher. And although ideally, I do think that next week is going to give you much higher probability conditions rather than this week. Same thing for Bitcoin, right? We can make a reasonable prediction, but this is not the most obvious setup. This is also not the most volatile setup. I think your opportunities are going to be better served in altcoins or in the traditional markets. Speaking of traditional markets, it's time to get into the traditional markets. So in this case, I do think we get like the daily buy, all right, the weekly bias is towards the upside. As you can see, I wrote it here already. Open low, close higher. So last week, we got a really bullish candle. So not last week, the week before, we got a really bullish candle. And what you can see here is that price did not even retrace to the 50% line of this previous weekly candle. This is a really good sign, and it shows that the bias is still continuing towards the upside. Now, like, I would have loved to film this video actually yesterday, because yesterday we wouldn't have had this, expansion move higher yet. But yesterday, believe it or not, was even more windy than right now. And I think you guys can already see the computer screen shaking every now and then from the wind. So, but anyways, it remains like the work was done yesterday. If you guys want more timely updates, something like this, feel free to join the Alpha group, because that's where I'm sharing my exact trades and, all of the analyses in real time. But hey, it's fine if you don't want to join either, right? It's just, if it's relevant to you, feel free to join. But otherwise, so expansion higher. Why? Because first of all, you got 2 really bullish moves, and last week you just retrace and you failed to go below the 0.5, which indicates strong bullishness. And so you can also see that there is a swing high here on the weekly chart that has not yet been taken in the last 2 weeks. If anything, you have left behind relatively equal highs over here. And so this week moving higher is just the obvious play, right? You've already taken out one of the draws in liquidity. Based on how aggressive Asia has been, you might even take out the second draw in liquidity and just complete the weekly bias, like right then and there on Monday. Going back to Forex Factory, you can see, yeah, okay, no wonder, right? Red news, this is what I mean, right? Usually, the Asia session for Euro USD, or just most of the Euro denominated pairs, as well as the USD denominated pairs, are really terrible, right? There's very little volatility because there is just no reason for volatility to be in the Asian session. But because Sunday was red news, which is rare, again, you're getting volatility right as we start the week, right? So this is how news plays a role in your analysis, and why you should trade on news days, and why you should use news to your advantage. This is what the professional traders do. And if you want to also trade if you want to get results like a professional trader, something you should consider doing. So that's your weekly draw liquidity. Given the fact that we are currently very close to that weekly draw liquidity, this is another one that you, in fact, there's not really much else to do. All right, this week is just going to be looking for an opportunity to trade higher. Potentially after this draw liquidity, we don't know what is going to happen throughout the rest of the week. Like right now, we can predict that, this level is going to get hit. But after it gets hit, does it continue going higher, or does it continue, does it start retracing? This I cannot predict, but if you do start retracing, this is going to be a really solid order block for you to start retracing into. So if you start retracing into here, heading into a news day, then potentially you're going to get something like this. Overall, the weekly opened here. You will expand higher. You will probably retrace here. This might already be the low of the week. And then either you go higher or you don't. But either way, the weekly candle is still going to be up. And the drawn liquidity target has, it's pretty close to getting hit. Again, you have a Euro red news event on Thursday and Friday. So potentially you can have some more volatility being injected into the markets then. But either way, that is Euro USD. Nothing much to say there anymore. Now, looking at GBP, so already I have drawn the previous daily high. Now again, I would not have expected the Asia session to be this volatile, but this would have been the drawn liquidity on the weekly chart, meaning the bias is towards the upside. Now, GBP USD as compared to Euro USD is showing much more bullishness, and the fact that, like, price is just moving up. And so this is the other drawn liquidity that has yet to be hit, that has the potential to be hit today. Not today, this week, because we're on the weekly chart. Now, what I would have loved to see happen was some kind of a retracement, right? Instead of the weekly open going straight up, I would have loved to see price retrace into this weekly fair value gap over here before some kind of an expansion higher before closing below, and something like this with next week also opening up low, high, close, right? So this would be like the average, not the average. This is what I would predict as the next 2 weekly setups if this raw liquidity does not get hit this week. Now, I cannot predict if this level is going to get hit this week, but the weekly bias is going to be up. If you get an opportunity to retrace below the current weekly open, which is right here, then you can look for an opportunity to buy low and to sell high. Now, as for how big this expansion is going to go, I have no idea, but this remains the higher time frame drawn liquidity. I think that until we hit this level, price can retrace, price can, go into consolidation, whatever. Like, this remains the target, and the overall bias will remain towards the upside until that level has been hit. So it's the analysis on GBP USD. Let's take a look at DXY. Now, DXY this week, I do predict lower. Now, open high, close lower. It just means power of 3 lower. Why? Now, main things first, this is the drawn liquidity. If you take a look on the monthly chart, this is the fair value gap that exists on the monthly chart. And secondly, you have just deviated above the highs, right? And thirdly, if we take a look at the weekly profiles, you can see that price actually is forming bearish candle closures. And last week, price traded within this bearish candle here, but failed to trade above it. Either way, like, I think the drawn liquidity, like, we're so close to this swing low here, as well as the monthly fair value gap, that it just makes sense that the price actually goes into here before potentially continuing the uptrend, or just, going lower. At least for this week, the bias is towards the downside, and the target is going to be 105. Now, I'm not saying that it's going to get hit this week, but here's how you can use this information, by the way. We all know that if the XY goes down, risk on assets go up, because, most risk on assets are denominated against the USD. If USD goes down, then, everything else goes up. And so, since we have a bullish bias on the euro, the GBP, and pretty much every other, USD denominated pair, then this can give you a signal on how those pairs are likely to play out, right? This is just an additional factor of confluence that we want to take into account, and ideally have behind our backs, so that, just like the wind, you have a tailwind, and you're not going against a headwind when you try to take a trade. So that is the analysis on the XY. Let's start moving lower. Let's go onto the NASDAQ. So NASDAQ, look for EQ to be respected and for bearish movement. Now, why do I predict a bearish movement in this case? Last week, we got a sweep above previous weekly high, but we, closed really bearish. Now, this is not the highest probability, I do have to admit. Like, compared to the other setups where it's really obvious, this one is not as obvious. Because currently, you have a previous drawn liquidity over here, like a previous swing high that has not yet been taken. So there is a very high likelihood, that price just continues going up from here. But based on this bearish candle closure, I think that we might be, just maybe, again, I cannot say for certain when it comes to the NASDAQ, but potentially you will. Essentially, there are only two scenarios here, right? If-then statements. This is how we think as traders. One is that you retrace, just right around the 50% line of the last bearish weekly candle, and you close lower, right? So essentially, open high when in bearish expansion, and then potentially close, right? This could be how the weekly candle plays out. The second is that, you just break above, and the way that we're going to determine that is to actually go on the daily chart. Now, to actually break above, you just really want to see a solid movement recovering this entire bearish candle, potentially closing above, and then for the weekly expansion candle to move higher, something like this. Now, I'm not saying that the bullish target here will get hit this week, but this is what you want to see in terms of the recovery to confirm that, hey, we're not just going to start dumping from here. Because as it stands right now, you have a fair value gap here that can be potential resistance, and like, yeah, you just really want to break above the 50% line at the very least. And so ideally what it could look like is you break above, hold the 50% line, and then that will give you some room to go higher. But overall, like in terms of the trend, you are very much within an uptrend. At the moment, you have kind of like a range low, range high situation going on, where you have just recently swept the range highs and relatively equal highs. So a retracement here will not be completely out of this world, like just a retracement before the move continues. But overall, like Nasdaq, not a pair that I would essentially trade this week compared to the other pairs. Like it doesn't look like a high probability trading week for the Nasdaq. I could also be completely wrong and just fail to see the buys that, you know, things are going to the downside now. And if this is the case, like if the bear is just really buys, by the way, then the setup is really easy. Look for price to get into this fair value gap and then expand lower. Like that's it. And on terms of the daily chart, this can be a drawn liquidity right there. 21,400. You could even use this one if this week is a especially volatile week. But yeah, bearishness, that's the setup. Bullishness, you really want to see price, you know, retake this level and then pump higher to 22,400. Now, as for which one's certain, I don't know. We have to see how the week plays out. Ideally, once we get closer to a news day, potentially tomorrow or even Thursday, Friday, we will have a much better setup. I will try to call this on Twitter if possible. So try to follow me on Twitter or at least subscribe to the Alpha Report. Anyways, oh no, you don't even have to. I am going to be sharing this as an Alpha Report on YouTube. What am I talking about? Anyways, going to the S&P 500, in this case, we are going to look for the EQ to hold. Now, the reason why I'm much more certain about the S&P 500 compared to the Nasdaq is because you have actually swept buy-side liquidity, and there are no longer any previous highs for you to take. Now, if in the Nasdaq, if you were to go down from here, eventually you would anticipate price to come back up. Why? Because now you have left relatively equal highs over here. And the reason why relatively equal highs are important is because retail traders always look at relatively equal levels as levels of resistance / support. And so that is a hotspot that people are going to be, one, setting their stop loss there, but two, looking to trade a breakout or to trade a reversal. Anyways, that's, you know, relatively equal levels are always hotspots of liquidity. Everyone is looking at those levels, and the market makers know that if they can just push the price to that level, you're going to put a lot of traders in a really uncomfortable position because, for example, if people are trying to buy the breakout, right, Nasdaq, it's at all-time highs, you know, we're going to buy the breakout, then we're going to keep going long. What happens then is that those people are going to end up buying high, and if the market makers reverse the price right then and there, then, you know, those people are trapped, right? Trapped breakout buys. And if you're a market maker, your best interest is to be making money, and the way that you make money in a zero-sum market, in a zero-sum game such as the financial markets, is to trap as many people as possible, cause them to lose as much money as possible. So that is going to be the play for the Nasdaq, right? But the ES is much more clear. The reason why this time around we're just going to look for the 0.5 to be bearish, for bearish continuation, is because buy-side liquidity has been served. There's no longer any reason. Like the people that needs to be stopped out here have already been stopped out. The people that need to be trapped up here, up high here, are already trapped, and like the job's done. Essentially, job's finished. And so this now remains a strong high. Again, a strong high is a high that forms after sweeping liquidity. So right now, I do think that this becomes drawn liquidity. Now, this one, much more obvious, a much higher probability compared to the Nasdaq. So now, some of you might argue again that, you know, the S&P 500 and the Nasdaq tends to move in tandem. So if the S&P 500 drops, the Nasdaq's going to drop as well. Hence why I say, you know, Nasdaq, probably the bearish bias. Now, in terms of the S&P 500, you're going to look to essentially the opening prices here. Right now, it's going up, which is exactly what we want to see for a bearish expansion towards the downside. And I do think the target number one is going to be right here at $6,011. And the second target, which may or may not be hit this week, is going to be right here at 5,935. So let's go on to the daily chart and see if there are any, you know, resistance levels that we can use. And in this case, it's this bearish block right here that is now validated as a potential bearish order block because you swept liquidity, price trades aggressively down below. This is now your change in state of delivery. And so if you do get back within this zone here, so you can see that not only are you within a fair value gap, but you have an order block support. So right now, if we overlap these two levels together, this is the key zone that you can potentially look for sell side shorts, especially if this is hit either on Tuesday, Thursday, or Friday, according to news days. So open, high, low, close, potentially, right? And then next week, so far, you open, potentially high, sweeping into a fair value gap, and then low, you know, I don't know, close, something like that, right? Again, just making predictions here, but overall, the bias on the S&P 500 is lower. Now, in terms of gold, open, high, low, power of 3 expansion higher. The weekly bias for gold is just higher. There's not too much around it. Now, I already drew the 50% line of this candle because we want, like, if we want higher prices, we want price to be trading above the 50% of the previous weekly candle. As you can see, like, you retrace kind of back towards the 50% and currently you're already pumping. This becomes a draw on liquidity. And if we were to just use the last weekly candle and see where the all-time high could potentially end up at, you can see that we are fast approaching the $3,000 level. And so I think that 2990, just taking a profit right before psychological level could be a really good TP in terms of the weekly expansion target. Overall, draw liquidity towards the upside, bullishness until proven otherwise, because like, just take a look at what gold's been doing. It's been going on an absolute tear, an absolute rampage, and this is going to continue until proven otherwise. Nothing much to say there. So let's take a look at the Dow Jones. So Dow Jones, you recently have a swing failure pattern, right? Where you sweep above a previous high, but you fail to close above it. This is a sign of weakness, and hence this movement right here. So for bearishness to continue, like, there are two ways this plays out, by the way. Overall trend is towards the upside. Right here, you have relatively equal lows. So right now, it's kind of like a 50-50, right? Where you expect the price to continue higher. And if it does, then, especially after filling in this weekly fair value gap here, then you want to see price breaking above the 50% and, you know, going higher. So I think for bulls, this is not an area where you want to be trading. You want to see more confirmation. For example, if this week's candle closes, like, before retesting 0.5 and it actually closes lower, then, you know, as a bull, like, your thesis is just not there, right? This is waiting for confirmation. But at the moment, based on this candle alone, what we would be looking to trade is actually first half of week higher, right? Open higher, right? For bearish expansion. But overall, like, this is kind of like a 50-50, right? If we were to trade with just the recent movement, it would suggest downside. But if we trade with the overall trend, it would suggest upside. So I think that as a bull next week, as a bear, you can trade this week, boom, 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 something like that. Yeah, let's go down to the weekly chart, the daily chart, to see if there are any potential levels. And again, just use the 50% line of the previous weekly movement for potential resistance point, because if you're a bear, you do not want to see price trading very much higher above the 50%. And if you're a bull, you really want to see price reclaim this 50% line. Either way, Dow Jones, not the highest probability setup, especially compared to the rest of the charts that we've looked at so far. So let's look at crude oil. I do think that the power of 3 is going to continue lower. Now, you have a buy-side liquidity sweep here and really aggressive weekly candle closures towards the downside, right? It's been just bearish for the past 5 weeks, and I think that you are reaching for some kind of higher time frame objective in this case. And at $66.5 is going to be the draw on liquidity. Now, we're going to draw a 0.5 from the last candle's weekly low to last weekly high. And right now, you just want to look for areas of interest before the 50% line of the previous weekly candle. And you can see that price currently has left behind a huge, huge gap. And this also lines up with a previous order block. So look for the price to sweep into this level and then continue down lower. Now, I'm not saying that price is going to go all the way down to that draw on liquidity, but I think this one right here from the day chart can be just the draw on liquidity for this week. So expect the weekly profile to play out this way. Aussie dollar. Now, we talked about the CPI earlier, but I think the Aussie dollar is going to go higher. Why? Because now this is one of the most clear bullish setups that I have. I picked this up on my radar 2 weeks ago and have just been trading it upwards ever since. Hasn't failed yet. So we have a swing failure pattern where you sweep a very key low on a higher time frame here, but you fail to close above. You fail to close below. In fact, you close above. In fact, you can even argue that this is a pretty strong movement towards the upside, which is a really good thing if you're a bull. Now, not only that, but on the very next week itself, you make another really aggressive candle close upside to the upside, which breaks market structure, which makes this a broken base, which actually makes this a change in state of delivery, because now you have broken now you've broken above this block here, which validates this as a bullish order block. And overall, you have left behind a bullish fair value gap right there. The overall bias is still towards the upside. So I think this week, ideally, what we want to see is some kind of a tap into this fair value gap right here, and then going back to target the previous weekly high. Whether we get that or not is another story. Price could also just literally pump straight up from here, And in this case, throughout the rest of this week, try to trade it higher, especially tomorrow you have CPI. So especially tomorrow, guys, this is going to be, I'm sharing the secret sauce here. If today goes down and tomorrow during the Asia session, during CPI report, you sweep this previous daily low and you tap into the weekly 5-day gap at CPI at tomorrow's Asia session, right? Just to confirm, tomorrow is the CPI. Yes, tomorrow is indeed the CPI. If you tap into it as exactly that timing, that is going to be a recipe to pump all the way up to the daily on the draw on liquidity. That's going to be the setup. Ultimately, I think though, you are reaching for this bearish fair value gap here because if you take a look at your overall structure, I do think that you're still on a downtrend, and so you look for bearish continuation after you tap into this bearish block. That's not to say that throughout this entire move here, we cannot trade to the bearish block. I'm just saying that, ultimately, depending on how price reacts at this level, the Aussie dollar is probably going to continue heading lower, with this being the draw on liquidity. But at least until this level is tapped, I don't think we're going to revisit this low anytime soon. So let's Aussie dollar, taking a look at New Zealand dollar. So compared to the Aussie dollar, all right, this is a perfect textbook example of how we prioritize one pair over the other. So if you take a look, even though the New Zealand dollar has a pretty similar setup compared to the Aussie dollar, where you have a swing failure pattern, you have a broken base, but there is no weekly 5-day gap, there is just nowhere for you to trade. And so in this case, we prioritize the Aussie dollar because it's much more clear and we actually have a setup in this case. So as you can see, again, there's no PD array. So if we had to pick one, we pick the Aussie dollar because there is a setup. USD Canadian, still the bias is towards the downside. Now, this is based on what I called last week, this was my top play of the week for last week. Now, you can see that last week ended up being just an inside bar, didn't do much of nothing, but the draw liquidity still remains, and overall, the setup is still really clear. Now, what actually happened last week is really interesting. For those of you who know anything about a market maker sell model / a 3-day setup, you have the original consolidation over here. You have a day 2, right, Tuesday, where you go up, and then day 3, and then right at around the London, you start dumping down, right? And right now, we are still within the market maker sell model, and so I think the overall bias is still towards the downside. Taking a look at the weekly chart, ideally, the ideal setup for this week is going for price to retrace, right? Open, high. So open, high, low, close. Something like this would be ideal. Whether we get it or not is a completely different story. You can also just continue dumping straight from here because, again, you have completed a market maker sell model. What you ideally want to see for bearishness to continue, by the way, is for price to actually break beneath all of these lows right here and to treat it as resistance. Because as it stands right now, you have relatively equal highs right here. And so if price actually finds support at this key block right here, then price is actually just going to go and sweep the high and complete the setup that I told you guys about just now. So this is scenario 1, and scenario 2 is that price breaks below here, finds this as resistance, and just continues going lower from here. But either way, the bias is still towards the downside, and I think that you guys should continue trading towards the downside. Now, I think it's time for a quick little coffee break because I've been speaking for like the last 25 minutes straight without any sort of break. All right, now it's time to get into the USD JPY. Now, this still remains the draw on liquidity. Now, I think that because of how the last week's candle closed, we're still in a really aggressive bearish trend. And so a price is unlikely to trade above the 0.5. And so we look for resistance points within this block here. And we don't really have much else other than the fact that we have a fair value gap up here. And so if price does retrace the fair value gap, that's going to be a really good sign for you to get into the trend. So again, overall, very bearish move. You're probably going to expect some kind of like open, high, low, close, or you can also just sweep out the draw on liquidity before retracing. That I think is the higher probability outcome. If we take a look at the monthly candle, this is a monthly fair value gap, by the way. And this is also a weak low, right? This is a low that forms without sweeping liquidity. And so right now, if you sweep the weak low, fill in the monthly fair value gap, and then you go up, that is also a very, very likely scenario and arguably the higher probability scenario versus going up into the fair value gap, going into the draw liquidity. I think you open high, low, close lower, but ultimately it's not looking like it's going to be a amazingly volatile week for the JPY. Now, just the third scenario that could happen is that you just dump straight down from here and you go into this weekly fair value gap that also lines up with the monthly fair value gap, right? If you guys recall, the monthly fair value gap actually extends beyond this level. So monthly fair value gap right there. But then the weekly fair value gap drawn using the two candles actually still lines up within the monthly fair value gap. So there's a likelihood that this remains the drawn liquidity, and you can also just dump straight down from here. Either way, look to, like, at any point, if you go above the weekly open and you have this pair with news and you pair it with a session and you have manipulation, whatever it is, look to trade this lower because the bias remains lower for the USD JPY. Now taking a look at USD CHF. In this case, it is, if you can see right here, I say maybe, because this is also not one of those high probability trade setups that I can see at the moment. So if you take a look at overall, right, basically since 2023, we've just been trading within a range where we've been oscillating to the range low and then to the range high. So there's nothing too much to note in terms of that. And so because we're in, based on current market conditions, we are in a range, we just look to trade the range. So currently, we are within a weekly. Wait, is this a weekly or is this a monthly? Yeah, this is a monthly fair value gap right there. So, hey, who knows? Potentially, we just bounce from here, but at the moment, it's not showing this kind of reaction yet. What you really want to see is right now, if we are bullish, then price dipping below. So price going below right now during the weekly open is a really good sign for an expansion higher before some kind of a close. So it's a really good sign. We just don't want to see like this entire week close beneath the monthly fair value gap, which will indicate continuation down to the weekly order block. Overall, I think we need to wait a couple of days or maybe maybe the entire week for a setup to present itself on the USD CHF. If anything, if we just trade it based on recent price action, then we just want to trade continuation. So retracing into here, probably there. But again, compared to the other pairs that I've given you, which have a really clear setup, I think this is not as clear. Now, guys, don't forget, in about 3 days, I'm going to be hosting a free masterclass. For those of you who joined the past masterclasses before, you know that this is one that is going to be full of value. If you want more information about how this masterclass and what's going to be talked about in this masterclass, click the link in the description box below. I hope you enjoy this weekly outlook, and I hope you guys trade safe and you guys actually manage to make some money out of the markets this week. Hope you guys enjoy this new format of doing a weekly breakdown, and then daily we're gonna actually get into the individual trade setups. This is what I do on a weekly basis, by the way. This is what professional traders do. We prepare for the week in advance, either on Sunday or Monday. And then as the week progresses, we already have our buys. We know which direction to trade to. We know what are the high probability areas where we want to be trading from. And on the day itself, we're just going to take the trade, especially on the news day. And again, we're already doing all of the prep work here. We're laying out the ground map. We're laying out the map. And when things just happen, we're just following the flow, following the plan that we've already set for ourselves. And this is what it takes to succeed as a trader. And this is how real traders do it. Anyways, I will see you guys on perhaps Tuesday or Wednesday for a daily alpha report. If you guys want to see how I turn these weekly ideas into an actual trade setup, then tune in then. Make sure you subscribe so that you don't miss it. Anyways, if you enjoyed this, drop a like, drop a comment. I'll see you guys in the next one. Bye-bye.